Producers and Christmas. Hello and welcome to our weekly outlook. Merry Christmas! In a short week ahead, with the Christmas holiday on Friday, markets will try to digest the central bank's decisions while production data, GDP, retail sales and personal spending from different economies around the globe will tell us what we have to expect from the financial markets. On the other hand, Omicron spreading so fast and concerns growing about that, with more countries setting restrictions rules. And finally, the IFC Markets updates ahead of the Christmas at the end. Number 1. US Quarter 3 final number of GDP. The final edition of US third quarter data will be out on Wednesday, with the modest upward revisions from 2% to 2.1%. This slight upward is expected mostly because of increase in residential and non-residential constructions, factory inventories and government spending. Given all these, it is still much less than the earlier 2.6% estimates. Supply chain and energy market shortage, inflation and labor market problems all together with COVID-19 concerns affected the demand in the economy that is externally sensitive to the consumer sentiment. Number 2. UK third quarter GDP numbers. After the rebound in the second quarter, market waiting a bit slowed down in the third quarter's numbers. At the same time, we are still optimistic to see 1.5% increase, unlike earlier 1.3% expectations. The main reasons for the weaker GDP in the third quarter comparing with the second quarter are the energy market shortage, chip shortage in the car industry and generally in a production chain. Sterling was under pressure mostly in the past months, and now with the growth expected in the GDP numbers and the BOE hawkish policies, it can get a little bit more support. Number 3. US personal income and spending. Even if this week's numbers cannot change the Federal Reserve decisions because they had a meeting just a week ago, however, personal spending can clear it for us what extent trade inflation has been weighing on the real personal spending. 5.7% PCE number expectations for November can be the highest since 1982. On the income front, and while since January, wages and salaries have already jumped 7.6% and it is the largest annual gain in 42 years, we are waiting for another 0.5% increase in November numbers. These expected numbers supposed to help the US dollar's boost. Number 4. Canadian GDP. Canadian GDP again returned to its growing path after a few months break. The labor market is strong and retail sales increasing, all signaling that we have to wait for a better GDP numbers. 0.8% expected increased GDP in the third quarter with increasing inflation and developing labor market can lift the expectations from the Bank of Canada to have more hawkish policies in the next meeting. Despite all these expectations, the Canadian dollar can be a little bit more under pressure because other central banks already started their tightening policies. And finally, the important update from IFC Markets. The 15th anniversary promo is in full run. Dear traders, you still have a chance to participate in the promo and become one of the lucky winners. IFC Markets has prepared many cool prizes for you. See for yourself. Dream cruises for 2, 𝗃𝗏𝗁𝗃 gold watch, iPhone 12 smartphones, Apple Mac Pro laptops, iPad Air tablets, lots of bonuses, and don't forget the Grand Prix Mustang Mach-E electric cars. It is a good chance to test your knowledge, especially when such cool prizes are played out. Thanks for being with us and hope it is going to be your week.